to cover a couple. You might see a chart or two that's going to show up at the conference here in this next few slides here. Just want to point out some neat stuff and give a little teaser what we'll be talking about at the conference. For corn, one of the slides we have in here is the comparison with the 2008 rally. 2008 shown in the dark blue line. This rally lasted for a full 340 days. That's the calendar days, not business days. So as far as that goes, it's something we've got to look at as far as the big picture. One thing I still want to point out, and this doesn't have exact dates on here, but I wanted to point out we have a little bit different here scenario laid out for 2008. Now, last few weeks we pointed out that we have about the same tightness of supplies as 2008. We said that before, stocks to use. We said that we have the same tightness at the peak of the rally in 2008. One thing different, though, is in 2008 we had some concerns about plantings. In other words, the market was asking for a lot of acres, and yet we had heavy rains going on during planting. So keep in mind that was a big boost here in the second half of this rally in 2008. Additionally, keep in mind, as we said before, we don't have the same energy prices as 2008. At this corn price peak, on this certain day, we had 143. It's actually 142.99 was the crude oil price. So keep in mind we have quite a different scenario for energy prices right now and also for corn planting. So that's one thing I want to point out of why we won't hit those exact same prices we hit back in 2008 for the rains. But we've got to be bullish in the big picture here. Overall, we're still being supported by energy prices and certainly by ethanol as well. One thing I wanted to point out is something a little different, though, which we don't see a whole lot of. Corn rallying like crazy, but ethanol having a hard time. So I'm not going to say this is happening right now, but at some point in the next few weeks, as we get near a top towards springtime for this corn market, we can start looking at this ethanol market a little more closely. In other words, will we see some more resistance at these price levels, at certain price levels, where that kind of limits also corn as well. So something we're watching there as well. But in the big picture, we're still very excited about corn. We like this 675 objective. Today we hit 662 3/4. And we view our 675 objective as being a minimum upside target, not a place where this market will stop. As far as soybeans, as far as that goes, just want to point out our two largest producers we have here are, I shouldn't say our two largest, but our two largest out of South America that the trade watches here. As far as our light bar here, Brazil, it still looks like these guys are set for a record crop as possible here. USDA is currently using 67.5. which is actually not a record for these guys. However, I believe it's 2 of the past 3 estimates that have come in have them now surpassing this last year's rally, or last year's level for Brazil. So 2 of the past 3 are suggesting a record crop for Brazil, higher numbers. As far as Argentina, we haven't heard many updates as far as estimates for the soybean crop, but you know, it's obvious of why we were kind of limited today in today's gains. As far as the grains overall, why we're limited in the soybeans. The fact that these guys got 3/4 to an inch and a half of rain this past weekend, up to 80 hundreds is lined up for the next 2 days for Argentina. I'd also want to point out for Argentina, temps are very moderate right now. We're not seeing those 90s touching 100. Right now it's 80s touching low to mid-90s for some highs. So I want to point that out right now. That as far as the soybean side goes, recent news, and probably will be for the next couple of days, kind of muted rather than straight out bullish here. As far as beans, we hit 1432.5 a couple days ago for our high, still using about the equivalent level for that same price on corn. The equivalent level on beans, you're probably looking around 1450, a little higher than that possibly as well. For wheat, I want to point out something interesting here, and didn't mean to steal one of Jim's slides, but I really like this one. This is kind of neat here. We've been trying to answer that question of, does poor conditions at fall, is that something that actually means anything? We all know that the biggest yield maker for wheat, for winter wheat, are spring rains. However, let's take a look at the past few years of low fall conditions. This is the last condition rating at the end of November or early December for those past few years. And we laid out what happened to yield in these past 5 years with these kind of red triangles here. Just want to point out that 3 of the 5 years that had these same type of low ratings in fall had below trend yields. 2 of the 5 didn't. So It's not really a nice conclusive study. It doesn't give us a nice perfect idea, but one thing it does kind of point out is answer that question, there's not a really solid issue here. It does depend on those spring rains. So one thing I want to point out is don't discount this winter wheat market as being a bust. Don't discount the production as being a bust. Still looks like we can pull off some production here if we get the rains. And just like we're waiting on corn planting for the corn market, looks like we're waiting on spring rains to decide for a top on the wheat market here.